All that being said, all the double-digit percentage growth that we have seen in residential prices in Dubai, when it comes down to it, if we start benchmarking where prices are in Dubai today against the rest of the world, it still looks extremely affordable. In the mainstream market, we're talking about prices in the region of 450 to 500 US dollars per square foot. If we move up into the prime market or the high-end market, we're talking about prices of around 1,000 to 1,100 US dollars per square foot. To put that into better perspective, a million US dollars in Dubai's prime residential neighborhood secures around 950 square feet of space, which is around 3 or 4 times more than you'd expect to get in London, New York, or Singapore, and about 5 times as much as you'd get in Monaco.
Hello, everyone, and welcome back to another episode of Majlis and Markets. As always, I'm your host, Hassan Jivraj. We've made it to episode 76, which is a great milestone for this podcast. And please remember to like, share, and subscribe wherever you're listening or watching this podcast. And also, please remember to sign up to all of our social media channels at Majlis and Markets. But now, for today's episode, I'd like to reintroduce a guest that we had on a while back, Faisal Durrani. Faisal, welcome back to the podcast.
Thanks, Hassan. Always a pleasure to be on your show.
Faisal, when we caught up last year, it was really, I was just listening to it last night, and it was a really fantastic listen to learn about you and your background and what you do at Knight Frank and what Knight Frank does in terms of its research and the overall real estate market within the GCC and all the different idiosyncratic stories. But today I want to focus primarily on Saudi Arabia, but also if we got time, we can talk about the UAE. But before we go into like the dynamics of what's happening in these two countries and the region and the more macro thoughts more generally, what have you been up to since the last podcast?
Where do I begin, Hassan? Well, I've been spending a lot of my time focusing on our thought leadership papers for the region. So, for example, earlier this year, we published a report called the Saudi Report, investigating demand for real estate assets in the kingdom amongst Saudi nationals. So that is available to download via our website. We also published a report looking at global high net worth demand for luxury residential real estate in Dubai called Destination Dubai. And just last month, I was in Cairo, where we launched a report called Destination Egypt, looking at global demand and GCC demand for real estate assets in Egypt, which has been on the rise. So certainly a lot of interesting real estate market trends in the region as it commands more demand from global investors.
Fantastic. And there's a lot happening. Obviously, we had the election of Donald Trump at the end of last year. I think we spoke before the election and the US interest rate cycle and tariffs and all the other macro things that are obviously impacting the real estate market within the Gulf. And I just returned from Saudi Arabia, my first visit to the kingdom since 2017. It was a really interesting time visiting. And I know last time when we spoke on the podcast, you talked a lot about Saudi Arabia and the dynamics. And like maybe today I might give some personal anecdotes from people I spoke to when I was in the kingdom, albeit I was only there for 5 days. But it was really interesting talking to different people, from a taxi driver or a shop worker to, say, a renowned economist. But in your words, how would you currently characterize the Saudi real estate sector?
I think the best way to think about the Saudi real estate sector at the moment is probably in two parts. I think in the residential sector, we're seeing a little bit of rebalancing as prices approach a fresh market peak. And I think we talked about last time some of the affordability constraints that were driving a slowdown in activity. We can talk more about that later. But in the commercial market and the commercial space, we are seeing ongoing growth. Rents are rising, demand is up for office space, for retail space, for industrial space. And then I think overlaid on top of that are, of course, the kingdom's crown jewels, the giga projects, which are rapidly moving from planning stages into executional phases now, which is helping to usher in a brand new world of real estate for the kingdom.
Yeah, no, the other big news I think that happened this year was the foreign ownership, right, of real estate in Saudi Arabia that foreigners can own. How significant is that for the kingdom's sector?
I think to answer that question, the best thing to do is just take a step back for a moment to reflect on where we are in the residential market in the kingdom. So, I mean, look, we've had extraordinary house price growth since 2016, when the National Transformation Plan and Vision 2030 were first unveiled. And of course, all of that was underpinned by one of the central pillars of Vision 2030, which is to provide world-class housing to Saudi nationals. And the government has achieved that through the introduction of various programs and initiatives, ranging from WAFI to Sakani, to the national housing program to the provision of cheap credit to the provision of long-term mortgages on fixed rates, and it has worked. We've seen the home ownership rate in the kingdom going from the mid 40% back in 2016 to around 66% today. So we're getting quite tantalizingly close to this government target of 70% home ownership by the end of the decade. Now, of course, with all of that exceptional demand, there has been an extraordinary rise in house prices in the kingdom, particularly in big cities such as Riyadh. I mean, if we think back over the last 6 years, apartment prices have doubled. In Riyadh, villa prices are up by over 50%. And clearly, people's incomes have not kept pace with that level of growth, which has created affordability challenges. Adding to that pressure on residential values is the fact that a city like Riyadh has seen 2/3 of all new jobs created in the kingdom materialize in the capital in the last 6 years. And our estimates also tell us that we've had around 250,000 young Saudis moving to Riyadh since 2019. So you can see that there is a really big upsurge in demand for residential real estate. Now, the rising house prices have started to dampen demand. In the last 12 months, we've actually seen a 30% decline in the number of home transactions in Riyadh, and affordability is playing a big part in that. But so is the fact that the pool of first-time buyers that we're trying to sell a home to is shrinking. As I mentioned, we're at 66% or so home ownership at the moment. Our target is 70%. So we're getting quite close to that 70% mark. So the decision by the authorities to open the market up to international buyers as of the 1st of January perhaps comes at a time when the market is showing signs of approaching a new peak. But where that demand will go on day one remains to be seen. I mean, when we investigated global demand for real estate assets in the kingdom prior to the announcement of this law, there was a very strong desire from global Muslim high net worth individuals to buy homes in the kingdom, particularly in the holy cities of Mecca and Medina. And what was fascinating is the reasons and rationale for wanting to buy a home in these cities wasn't driven by investment. It's driven by religious and cultural reasons. And some of the explanations provided by these high net worth Muslims was things as simple as that's somewhere I'd like to retire. That is somewhere where I'd like to spend the rest of my days. So we feel, yes, there will be demand on day one, but where it is focused, I think we need to wait and see. But also at the same time, we have a large long-term expat population in the kingdom, which I feel is where a lot of that demand will come from for expats who consider Saudi home. And look, the ownership law, we know as much as you do. As far as we understand, the demand will be focused on specific projects or specific neighborhoods in the big cities. The holy cities will have their own rules and regulations. And for us, this very much mirrors what we have seen in markets elsewhere in the region, in Oman and in Abu Dhabi. When these markets were first opened to international buyers, they were focused on what were referred to as investment zones. And what happens over time is these investment zones tend to outperform the rest of the city or the rest of the country, because you've got international buyers and domestic buyers competing for real estate in a finite space. And, it depends how the Saudi authorities decide to take this forward, but at least in the first instance, we feel this will result in the creation of a two-tiered market where these investment zones will do a lot better than the rest of the country.
I mean, just off the back of that, talking about affordability, and you've talked about how a lot of young Saudis have moved. A lot of it's been concentrated in places like Riyadh. I think I just mentioned to you just now offline. That was a really great piece in the Financial Times, which I'll link in the show notes, which talked about the wealth disparity in places outside the big cities of Saudi, and it talked a lot about affordability. And I know that the kingdom's recently, or Mohammed bin Salman has recently said about freezing, I think, rents for 5 years or something. Do you have any more color on this and what it actually means for the sector?
Yeah, I mean, look, we have seen over the last 6 to 12 months a concerted effort by the authorities to address the affordability issues. One of the things that was done, as you mentioned, is to freeze rents in Riyadh. And this freeze is in place for the next 5 years. It is applicable across all real estate sectors, as far as we understand, and the rents are frozen even for new tenants or new occupiers off the real estate. Now, this has been done because, there are pockets in Riyadh, particularly in the north of the city, where in the last couple of years we've seen rents jump by 30 to 60%. And that is really challenging the concept of continuing to rent for a lot of people who, for many of whom, it might be cheaper to actually get on the housing ladder. But we've then got the dichotomy of the fact that house prices have accelerated so far beyond what the average person can afford that makes that jump ever more challenging. In addition to the rent freeze, what we have seen the government do is to try and unlock more housing supply for Riyadh. And they've done that by increasing the white land tax from 2 to 10%. The white land tax is essentially a tax on undeveloped land. Whilst, of course, the goal here is to unlock more land for housing, a lot of the land tends to be held in complex family ownership structures, so releasing it can be quite challenging. Also, for some of these family offices and family enterprises, they might not necessarily have the technical know-how to bring forward residential developments, or they may not aspire to be developers, either build to sell or build to rent developers. So we've got an interesting situation in the market now where some of these landowners have had to sharpen the focus on whether they want to hold and pay this tax or sell it on to somebody who can build and bring it forward. But we've got developers who are eyeing the market where land prices are now starting to correct a little bit and are thinking, actually, I'll hang on until land prices fall a little bit more before I purchase. So there's a little bit of a standoff there. But in addition to that, the third intervention by the government was the decision to release land in the north of Riyadh to individual buyers, and the prices are capped at 1,500 riyals per square meter. What we know anecdotally is that there are buyers who had committed to purchasing some real estate off plan, but actually withdrew their interest because for many, it may work out to be cheaper to buy their own plot and build their own home. So we're seeing an interesting rebalancing in the residential market, I guess is the best way to think about it. But please don't get me wrong, the long-term demographic story for Saudi is extremely positive. Our own estimates suggest that we need around 830,000 units in the next 10 years just to accommodate the growing Saudi population. So the challenge we have at the moment is there is a gap between what buyers can afford to pay and what is being delivered in the market. And some of these government interventions should help to address that to an extent.
I know anecdotes are not really the best thing when, describing about markets and stuff, but Faisal, when I was from the airport to my hotel just now on this trip, I got talking to the taxi driver, and he was telling me about how he bought his property and about talking about SRC providing financing to the banks. I mean, how successful do you think this has been in terms of increasing home ownership within Saudi Arabia?
Exceptionally successful. I mean, in the last 2 years, we've had over 200,000 families benefit from the various government programs and initiatives that have been put into place. However, all that being said, we still feel that there is a huge opportunity for developers to partner with banks for two different reasons. One, when the international homeownership laws do get implemented from the 1st of January, we will have purchasers who are non-resident in the kingdom. Developers will need to credit check them. And the only way to do that will be to partner with banks that are based overseas in some of the markets that these buyers are likely to come from. In addition to that, we've got long-term expats, as I mentioned, that will be keen to get on the housing ladder. And right now, it is commonplace around the region for developers to partner with banks to effectively offer pre-approved mortgages to purchasers. Essentially, it happens in the same room. You approach the developer on one desk and you ask them for a property. They then send you to another desk in the same room to talk to their partner bank to get a mortgage. However, in Saudi at the moment, aside from the NHC that does this, we don't really have a situation where developers have established partnerships with banks to offer mortgages, which is why we see this as a huge area of opportunity that is yet to be tapped into by the authorities.
In a lot of cities like Barcelona, even here in London, other cities as well, a lot of local residents complain about that, how a lot of properties are used for things like Airbnb or these kind of similar things. When I was in Riyadh, I was talking to somebody, he was talking about renting his property as an Airbnb. Do you see this as a longer term risk for the Saudi real estate sector in the sense that people will start using their properties for things like Airbnb or hosting?
It's a good question. I mean, look, the build to rent market, I think in the kingdom, again, is another significant area of opportunity. I mean, as I mentioned before, we've had about 250,000 young Saudis moving to cities like Riyadh in the last 6 years or so in search of better employment. Now, when these young Saudis who are typically unmarried, don't have any kids, arrive in the capital city for the first time, their focus isn't necessarily on buying a home. It's on renting one, at least until they make up their minds as to how long they are going to stay. And of course, over time, they may need a bigger property as they go through that property ownership life cycle. However, it isn't just about renting any property or any apartment. They are looking for properties that come with modern facilities and amenities. And to be honest, today that is in short supply in Riyadh. And when I say modern facilities and amenities, I'm talking about things like having a concierge, on-site security, site retail facilities, a pool, a gym, etc. And that type of stock that is purpose-built for renters is quite commonly available in major global cities around the world, whether it's New York, Singapore, London, Dubai. You find this everywhere. If Saudi is going to, cities like Riyadh, for example, are going to continue attracting young Saudis to come and live and work there, as well as expats who are moving to the kingdom in search of better employment opportunities. In the first instance, that is the type of stock that they're going to seek out, and we don't have very much in the way of it. So if the new home ownership laws help to deliver more professionally managed build-to-rent stock in the form of more Airbnb units or the like, I think that would be a positive outcome for the market.
Before this conversation, I was just doing a bit of research. I know TikTok's probably not a great source of information for certain things, but one thing was interesting was that you got a lot of, like, as you mentioned, a lot of foreign expats moving to Saudi Arabia for career opportunities or to move to Mecca and Medina for religious purposes and cultural purposes. But one thing that was interesting is that if you look at some of these TikTok accounts, when they were talking about looking for a property, they used social media to source a lot of these properties. So I guess my question is, do you think like social media and fintech can help, improve the way that properties are sourced for not just foreigners, but also for Saudis as well?
Good question. I mean, look, the residential market in Saudi is and has historically been driven purely by domestic demand. But with the changing rules and regulations to encourage more international investment and ownership into the market, then inevitably we will see different sources and mediums being used by buyers and tenants to find property, be it TikTok or Instagram or what have you. So yeah, I think this, we are watching the market evolve in real time today.
One thing that came to my mind, Faisal, is on the last show we had a portfolio manager, a bond portfolio manager, talk about the Saudi fixed income market and how Saudi Arabia has been doing really well in the emerging market space. Debt levels have increased a lot. Even I think they're almost hitting 2017 levels when Saudi Arabia first issued an international bond in its history. Vision 2030, when I was there, like a lot of people, and you mentioned this as well, but the giga projects, a lot was happening. How is the macro situation in Saudi Arabia's economy impacting the real estate sector, would you say, at this point in time?
I mean, look, all of it is so closely intertwined together. Vision 2030, at its very heart, is designed to help Saudi move away from its dependency on hydrocarbon revenues. And in order to do that, the real estate sector is playing a big part in helping to deliver that ambition. I mean, we have been tracking the total volume and value of real estate and infrastructure projects that have been announced as part of Vision 2030 for quite some time. Today, that total sits in excess of 1.3 trillion US dollars. But what is more fascinating is that we are now at a stage where we've got $196 billion worth of contracts that have been awarded. So we're moving very quickly from conceptualization into execution and delivery, which is a significant change for the market because the real estate and construction sector itself is playing a big part in helping to diversify the economy and create jobs. In fact, we know that somewhere in the region of 75% of all new employment has been in these sectors in the last 6 years. And that isn't a surprise, given that Vision 2030, again, for all intents and purposes, is a very large real estate development project designed to help transform the kingdom's physical infrastructure, its physical landscape, and attract more investment into the property market. So yeah, it's having a huge impact to answer your question.
I visited King Abdullah Financial District. It's a fantastic area. Reminds me more of ADGM, I would say, than DIFC per se, in terms of how it's spread out. But the Saudi government basically passed a law or told companies that wanted to work within the kingdom, they had to base their regional headquarters within the kingdom by a certain date in order to continue to do business with the kingdom. How has that impacted the commercial real estate sector within the kingdom?
I mean, really good question. So within the kingdom, what has happened is initially we saw a lot of businesses relocating from elsewhere in Saudi to places like the King Abdullah Financial District, cities like Jeddah in particular. We saw businesses, talent, and demand for real estate move. However, that has reversed to an extent because we're seeing the government invest more heavily in the giga projects on the western seaboard, and a lot of those jobs tend to be hubbed out of Jeddah. So the demand is returning to an extent. But you're right, the government did ask businesses to consider establishing their regional headquarters in Riyadh in order to continue working with the government, and that has helped to drive up demand. I mean, Riyadh, like Dubai, like Abu Dhabi, are quite unusual in the world today in that these are cities that have run out of prime grade A office space. In Riyadh, we're talking about vacancy rates of sub 2 or 3%, which is at a historic low, but we know that supply is coming. But for the time being, businesses are being forced to consider perhaps less than ideal office space, which is why we're seeing strong growth for grade B offices that are perhaps in more secondary locations as well. And look, the regional headquarters program has been exceptionally successful. We've had, around 600 companies so far that have committed to establishing their regional headquarters in Riyadh, and this is well ahead of where the government was expecting to be by this point in time. And the impact elsewhere on the region, I would say thus far, has been quite negligible. And that's not because businesses are shying away from establishing a presence in Saudi. It's just that we have such a dynamic, exciting, brand new global economy that is slowly opening up, where the demographics for somewhere like Saudi are almost the opposite of that to the UAE. We've got what is the 17th trillion dollar economy in the world that is now opening its doors to international investors. And that in itself is helping to create demand for office space. So businesses aren't necessarily shifting their headquarters, but they are establishing new presences in Saudi where previously, they may not have had a base.
Yeah, no, that's really interesting. One thing, Faisal, that I wanted to ask you is when I was talking to this taxi driver on my journey there, he also mentioned to me that there isn't enough within the tourism sector, and specifically talking about Riyadh. He mentioned that there aren't that many mid-range hotels. There's either really high end or really low end. And I'm sure you visit the kingdom quite regularly, and it was quite startling to me to see how many cranes and how much construction there is going on from the airport to say downtown Riyadh. But why do you think there's still like this big demand for like mid-range hotels or more like catering to more different types of tourists within Saudi Arabia?
I think the hospitality sector is quite an interesting one, but especially in a city like Riyadh, where today we've got somewhere in the region of 28 or 29,000 hotel rooms. Just to put that into context, not that it is fair necessarily to use Dubai as a benchmark, but in Dubai we've got about 153,000 hotel rooms. Riyadh's got, a population twice of that of Dubai, where we're approaching 8 million people in Riyadh. And it is the commercial nerve center of the kingdom. As I said before, it is where Vision 2030 is emanating out of. And we're tracking around 28 or 29,000 hotel rooms that are planned or under construction due to be delivered in Riyadh by the end of the decade. But as you say, the focus historically and going forward continues to be on the kind of 4 or 5 star plus market segment. In fact, by 2030, around 70% of hotel rooms in Riyadh will be in the 4 and 5 star plus category. And we feel that there is an opportunity and a need to consider building hotels that cater to more affordable budgets, not least because the domestic tourism market today forms the backbone of tourists in the kingdom. And of course, if we want to try and attract tourists of all backgrounds from around the world, we need to make sure that we provide hotels that everybody can afford and not just zoom in on that high end segment, which of course is always very tempting.
A lot of this development in Saudi has been focused, as you've rightly mentioned, on Riyadh. But what about the other areas? You know, if you take out Jeddah, like or even Jeddah as well, right? Like, but what about the other regions within Saudi? Because I go back to this FT article I was mentioning. It talked about areas outside the two big cities. Do you see it as like a mismatch? Like, there's a lot being in Riyadh, but there's not in other areas within the kingdom.
I mean, look, the development is planned nationwide. Riyadh, for obvious reasons, has been at the heart of all of the development plans. That is where the housing need is strongest. That is where the demand for office space is the highest. So it stands to reason that that is where we would see the bulk of demand and construction activity. But beyond that, with some of the other giga projects, they are pretty well scattered around the kingdom. Places like Al Ula or Qiddiya, or even the Red Sea global development that includes Amala on the Red Sea coast. I mean, we are seeing significant development activity outside of Riyadh too, but I think I come back to my point where, the need today is greatest in Riyadh, which is where the transformation is taking place the fastest.
With Saudi Arabia hosting the 2034 World Cup and other events before that, what do you think needs to be done in order to cater to all of these people that are coming to the kingdom within the next, say, 10, 15 years?
I mean, look, the kingdom's got a pretty rigorous roadmap in terms of delivering infrastructure in order to host the 2034 World Cup. I mean, we are expecting around 18 or 19 billion dollars to be spent on upgrading existing stadia or building new ones around the country. But in addition to that, we need to think very carefully about where all these people are going to stay. The hotel stock that exists in the country today is quite limited. And very routinely, as I'm sure you will have experienced yourself, cities like Riyadh, during the high season, during conference season, it's very difficult to find a hotel room. So we do need to think about rapidly unlocking more hotel opportunities, hotel development sites, and also need to see continued investment in promoting and making Saudi Arabia's historic and cultural sites outside of the holy cities more accessible and promoting them more widely. So I think
Yeah, no,
we are on
absolutely.
a journey. We've got 10 years before the World Cup comes to the kingdom. And I think we will see a lot more reforms in the tourism and hospitality space before that.
I just want to shift gears a little bit and talk about everyone's favorite real estate story within the Gulf is the UAE, and particularly Dubai. Faisal, like, it seems like whenever I open social media, whatever app it is, everyone's become a real estate broker in Dubai and everyone's an expert on Dubai property market. But obviously, I'd come to you for the property knowledge within the region. At the moment, Faisal, how would you characterize Dubai's real estate market?
I would say today we are approaching the fifth anniversary of the current price rally that the residential market in Dubai has been experiencing since November 2020. And look, I know it sounds pretty cliche, but every market, irrespective of where we are in the world, has a beginning, a middle, and an end. And after almost 5 years of uninterrupted growth, this is the sort of time that we would start to expect to see a slowdown in the rate of house price growth. However, we're not seeing that yet. And in fact, there is nothing in the data to suggest that we are approaching an imminent cliff edge moment. And that is probably down to the fact that the nature of buyers in this cycle is so different to what we've had in the past, where things were historically driven by speculative investors, whereas today, people who are buying for genuine reasons as genuine end users. And I'm not just saying that based on anecdotal evidence. We have data as well to support that. For example, we define a speculative investor as somebody who purchases real estate and sells it within 12 months of acquisition. So back in 2008, around 25 to 30% of homes were resold within 12 months of being bought. For the last 4.5 years, that number has hovered between 4 and 5%. So that's giving us a really good indication of the fact that people are buying and holding. And yes, there is also an element of developers that are self-policing, where resales are prevented until certain construction milestones are reached, until certain payment milestones are reached, until handover, in some cases until a year after handover. But we also know at the same time the population is rising in the city. Last year it grew by 4.5%. We added 170,000 people. During the first half of this year, we added 105,000 people, which means the population is growing a little bit faster this year than it did last year. And we also know school enrollments are up by about 9% year on year. So the family segment of the population is actually growing faster than the rest of the population. And that tells us that these are people who are moving to the city from abroad with their kids, with their businesses, and you know, giving us confidence in where we are in the cycle today. But please don't get me wrong. We do see risks in the market. And for us, one of the biggest growing risks is the threat of an oversupply of housing. I'm happy to talk through the numbers. We're tracking around 352,000 homes that are due to be delivered in the next 5 years. That works out to around 70,000 units per year on average, which is double the level of completions the city has seen for the last 20 years. But when we overlay population growth or projections for population growth on top of that, we see that we're not too far off even the government's what we believe is quite a conservative estimate for population growth. The government is forecasting the population to grow by around 2.9% for the next 15 years through to 2040, which takes us to around 5.8 million people. But as I said, last year the population grew by 4.5%, and in the last 20 years, the compound annual growth rate has been around 6%. So in effect, the population will probably end up somewhere between the government's estimate and our own projections. However, to accommodate that level of growth, we need somewhere in the region of 35 to 100,000 homes per year for the next 15 years. And the challenge we have today is that developers are unable to meet their time commitments. What I mean by that is they're not delivering the housing on time. The actual materialization rate or completion rate over the last 3 years has averaged 60%. And last year it was down at 50%. We've been a bit more optimistic in our outlook and assumed that 70% of housing will be completed on time, which reduces our 350,000 home figure for the next 5 years to around 246,000. Which we feel is quite well matched with the government's own population growth projections. But the population growth may slow. Developers may find a way to deliver housing at a faster rate, which would then upset our model and, of course, quickly bring to an end this current cycle. But we are 5 years into this cycle, as I said at the start of your question, and that compares to 6 years of uninterrupted growth in our first cycle and 4 years of uninterrupted growth in our second, which is why we sort of feel that we're approaching a point where the market should soon show signs of slowing, but we're not there just yet, because even at the top end of the market, demand continues to be uninterrupted. In fact, we just published last week our latest data on the $10 million homes market in Dubai. For the first 9 months of this year, we've now had 357 homes sold at more than $10 million, which is putting us well on track to eclipsing what happened last year and putting us on track for Dubai to continue holding on to its position as the world's deepest $10 million homes market. And that is a title it has held now since 2022.
It seems like everyone from the UK is moving to Dubai, given the economic situation here in the UK. I think there's been an exodus of millionaires and people with significant wealth from the UK. I mean, how significant has that been for Dubai's real estate market?
Exceptionally. I mean, look, one of the key defining features of this current market cycle has been the influx of ultra high net worth individuals who continue to target the city's most luxurious and most expensive homes. And, all that being said, all the double-digit percentage growth that we have seen in residential prices in Dubai, when it comes down to it, if we start benchmarking where prices are in Dubai today against the rest of the world, it still looks extremely affordable. In the mainstream market, we're talking about prices in the region of 450 to 500 US dollars per square foot. If we move up into the prime market or the high-end market, we're talking about prices of around 1,000 to 1,100 US dollars per square foot. To put that into better perspective, $1 million in Dubai's prime residential neighborhood secures around 950 square feet of space, which is around 3 or 4 times more than you'd expect to get in London, New York, or Singapore, and about 5 times as much as you'd get in Monaco. So on a relative value basis, the city still offers very good value. And at the same time remains relatively affordable to people who live and work in the city. Despite all of the growth that we've seen during this cycle, across the entire city, you need circa 5 to 10 times your average annual income in order to be able to buy an apartment or a villa. And usually an income multiplier up to 6 times is what we would class as affordable. And the bulk of the city does still remain affordable, despite everything that has happened during this cycle.
Faisal, one thing I wanted to ask you, when I mentioned we had the bond manager, the bond guy, portfolio guy in the last episode, and I asked him about the number of real estate companies within the UAE which are issuing debt, particularly from the Dubai. We're seeing a lot of bond issuances and sukuk issuances from a lot of real estate companies. Are you not worried that there may be like a real estate bubble growing, or like I think you've also articulated that we're in this cycle, but are you not worried that there could be a bubble on the horizon?
I mean, look, we just don't see anything in the data today to suggest that we're in the midst of a price bubble. Prices remain relatively affordable. Demand remains strong. Housing supply is coming through, but it is constricted in places. And I think the extreme market volatility that we have seen in the past is unlikely to repeat itself. I think in this current cycle, when we do approach its peak, we will see a more nuanced market where the challenges may probably lie around neighborhoods where a lot of stock is being completed or within certain price bands. I mean, as I said to you before, the fastest growing segment of the population is around families, for example. But when we look at housing supply that's coming through, only 16% of those 350,000 units are going to materialize in the form of villas. And that tells us that the villa market is likely to remain pretty resilient in the face of any price correction that may or may not happen. So I think this time around, the cycle will be different. There are very different drivers. The dynamics are very different. And that international high net worth cohort that I've referenced a few times is, the appetite for investment from that group is insatiable. We carried out a study this year of global high net worth individuals where we interviewed 400 of them in the UK, India, Saudi, and across East Asia. And between these 400 individuals, they were willing to commit $10.3 billion to Dubai's residential market. And this is, like I say, just 400 people. And last year, Dubai had around 100 billion US dollars of residential sales. And during the first 6 months of this year, we've had $73 billion of residential sales. So just to give you an indication of that depth of demand, we are not yet seeing any signs of a slowdown. So it's hard to sort of predict the emergence of a bubble when the demand is so resilient, despite everything that is going on globally.
So if we transition to Abu Dhabi, the capital of the UAE, and also known as the capital of capital, I mean, we've got Abu Dhabi Finance Week coming up, and you and I have spoken a lot about the Abu Dhabi market. People can talk about ADGM and all these other areas. How would you currently characterize Abu Dhabi's real estate market?
The Abu Dhabi market is also in the midst of an upswing at the moment. We are seeing rising demand. We're seeing prices rebounding for residential and commercial real estate. And we're also seeing a change in the nature of buyers in the market. So if we take the residential market, for example, as at the end of H1, prices are up around 16 or 17% year on year. But for us, we know that Abu Dhabi has historically been driven by Emirati buyers, by expats who are perhaps priced out of the Dubai market or perhaps looking for what is perceived to be a more family-friendly lifestyle, looking at Abu Dhabi, which of course remains about 30% cheaper than Dubai. But it is the emergence of international buyers in this market that is quite interesting. We've done some analysis around Aldar sales. Back in 2022, we found that around 3% of homes that Aldar sold were sold to non-UAE residents who do not live in the UAE. And in 2023, that figure jumped to around 28%. Last year, we were in the early 30s%. So you can see that there is that rising interest from international buyers to purchase real estate in Abu Dhabi. And this is probably a reflection of the fact that people perhaps maybe are already exposed to Dubai, priced out of Dubai, looking for a second investment in the UAE. But it is changing, and it's changing fast. But the market, relatively speaking, remains small compared to Dubai. As I said to you, in Dubai, we have around 350,000 homes that we're tracking due to be delivered in the next 5 years. For Abu Dhabi, it's about 10% of that. We've got 34,000 units that we're tracking for completion in the next 5 years. So it's a smaller market, but it's changing quickly and attracting more international interest.
Interesting. And then do you think because every time you're reading articles, right, you hear like a hedge fund is basing themselves in Abu Dhabi and they're buying like really high-end real estate projects in Abu Dhabi, and I guess also the with ADGM and Abu Dhabi being a bit different to Dubai also is attracting a lot of people to relocate there, right?
Yeah, absolutely. I mean, look, when it comes to the office market in Abu Dhabi, it's a similar story to Dubai and Riyadh. where we are running out of best-in-class Grade A office space. And for a lot of these international hedge funds and family offices, by their very nature, they are only looking for the best Grade A offices that money can buy. And we have run out of that, which is why we've seen, for example, ADGM announce its decision to expand the size of its free zone to unlock more premium office space recently. And office rents have responded, they are climbing, and the demand is growing. And at the same time as we're seeing demand from hedge funds for office space in Abu Dhabi, we're seeing that in Dubai too. But supply is coming. We are keeping an eye on the growing volume of supply in both cities, but it is going to be 2 or 3 years before that begins to materialize.
One thing I wanted to ask you, I know you don't cover RAC, and maybe it's a bit difficult to ask you, but obviously this big project which is taking place of the Wynn casino, which is going to be online, I think, in a couple of years, and it's going to be the first casino in the Gulf, and outside. I think only Lebanon and Egypt have casinos, but so it's going to be a big development, and a lot of people have been talking about this. I mean, from a macro level, how important would something like this lead to the real estate market increasing?
I mean, look, Ras Al Khaimah historically has been very much a staycation destination, and I think that was turbocharged to an extent during the pandemic when international borders were closed and domestic travelers were forced to look at locations closer to home. And for some time, we have seen Ras Al Khaimah trying to reposition itself as a complementary hub to Abu Dhabi or to Dubai. And the decision by the UAE authorities to allow RAK to open the country's first responsible gaming venue or casino has had an impact on its global perception. We interviewed around 300 global high net worths last year to understand how they perceive Ras Al Khaimah as a place for real estate investment, and 64% of them actually said the decision to open the Wynn Resort has had a direct bearing on how positively they view Ras Al Khaimah as a place for a real estate investment. So clearly it's having an impact, and we uncovered somewhere in the region of $390 million that these global high net worths were willing to commit to the Ras Al Khaimah real estate market. And for Abu Dhabi, just to compare, it was around $410 or $420 million. So RAK not too far behind what global investors were willing to spend on Abu Dhabi, which shows how quickly something like the Wynn Resort, something like the government's integrated tourism strategy, and something like the government's plan to diversify the economy in Iraq is already resonating with global investors.
Great. As we bring the podcast to a close shortly, Faisal, I want to just take a step back and look at more cross-market themes. The one thing that a lot of people here in the UK are talking about is sustainable homes and energy efficiency. How would you characterize, I know last time we spoke a bit about ESG on the podcast, but how would you characterize the role of ESG within the real estate sector at the moment within the UAE?
I think it's critical. I mean, we've got such a youthful population around the GCC, and it is that next generation of home buyers, of real estate users that are extremely green conscious. And at the same time, a market like the UAE, which is so dependent on international investors buying real estate, we are seeing them coming into the market and demanding more green rated assets. Businesses in particular have got global mandates to occupy nothing less than green rated offices. And that has been driving demand for greener offices with a LEED or a BREEAM, a WELL or a WIDE score certification. And that has resulted in the emergence of more green rated space, and also landlords refurbishing and building in these green credentials into their office buildings. On the residential side, we don't really see individuals asking for a specific environmental accreditation on their properties, but instead, what we see is buyers becoming more interested in the technologies being deployed in their homes to help them save energy in the long run. So that is how it is manifesting itself differently in the residential and office markets. But yeah, it is a critical component. It is being top-down driven. We've got initiatives at a federal and local emirate level across the UAE that are helping to foster greater adoption of green tech. One of my favorite examples is from the government of Dubai, which has a mandate for all developers from 2030 onwards for 30% of every development to be manufactured using 3D printing, for example, which in the long term helps to bring down construction costs, reduce your carbon footprint, and of course pass on any potential savings to end users. So yeah, there is a lot going on in this space, and it is heavily influencing the property market.
How would you say the US interest rate cycle, it seems to be going in that direction now, and there's a lot of speculation that there could be another interest rate cut, if tariffs do feed into the US data within the next couple of months, there could actually be an interest rate increase. How is that impacting the real estate markets in the GCC?
We are, as you say, in a low interest rate environment at the moment, which is helpful. However, rising interest rates, whether fueled by rising global inflation or other factors, are always negative for property demand. It means it becomes more expensive for borrowers looking to buy individual properties. Means it's more expensive for developers looking for development financing. That is always a risk for any property market in the region, something that we are monitoring. But around the region today, we've got different challenges, different things impacting the market. In Dubai, the residential market is largely driven by cash purchases. In Saudi, high interest rates have historically meant that it has been expensive for individuals trying to get onto the housing ladder, but the government intervened by providing long-term mortgages on fixed rates to Saudi nationals looking to get on the housing ladder. So I think it is an area that we need to keep an eye on, but I don't see that being an immediate risk, at least given how low interest rates are.
Very good. And Faisal, tell us any projects you're working on, any upcoming projects you're working on.
Yeah, Hassan, things you can look out for are the second part of our Saudi report, which should launch next month. This will investigate demand for non-residential sectors across the kingdom, looking at how Saudis perceive sectors like the healthcare, education, retail, entertainment, and F&B sectors, how they engage with it, what their thoughts are on investing in these sectors. And also coming up later this year will be our outlook for the residential market for Dubai. So please don't ask me about that, but we will be publishing that soon, which will give you an idea of where we think prices are going to go next year.
If you send it to me, I'll link it in the show notes. And what's the best way to reach you? Is it LinkedIn still?
The best way to get to me is either on LinkedIn, or to be more conventional and send me an email.
That's great. No, I'll link it in the show notes. But Faisal Durrani, this has been a really great catch up and a really great insight into, especially the Saudi real estate market. Because, like I said, I had a really interesting time just talking to people there, and like now speaking to a specialist like yourself, that's really given some really great color. And I hope for the viewers and listeners as well, they've learned a lot in this episode. But thanks again for coming on the podcast.
Thanks for having me, Hassan.